Imagine it's Friday. It is the first of the month. You check your phone and the notification is there. Your paycheck has been deposited. But this time, next to the balance, there is something new. A small ticking clock. A countdown timer. Underneath the numbers, a line of red text reads, "Funds expire in 30 days." You panic. You had plans for that money. You were going to put half of it into a savings account for a down payment on a house. You were going to fix the transmission on your car. But now the rules have changed. The central bank has decided that the economy is slowing down. They claim the velocity of money is too low. People are saving too much and spending too little. To prevent a recession, they need you to consume, right now. If you don't spend that money by the end of the month, it doesn't just sit there, it vanishes. It is deleted from the ledger. Your labor, your time, your energy, dissolved into thin air because an algorithm decided you weren't participating in the economy fast enough. This sounds like a dystopian fiction, a Black Mirror episode regarding a distant, authoritarian future. But it is not distant, and it is not fiction. This is the theoretical endgame of the Central Bank Digital Currency, or CBDC. We are standing on the precipice of the most radical reimagining of money in human history. For thousands of years, money was an object. A gold coin, a silver shekel, even a paper note. It was something you owned. It was a bearer asset. If you held it in your hand, it was yours. We are now transitioning to a world where money is not an object you own, but a permission you are granted. This is the story of how your bank account is being weaponized, how the expiration date on your money is being written into the code, and why the cash in your pocket is the last line of defense between you and total surveillance. To understand the threat, we first have to understand the deception. Most people believe we already live in a digital currency world. You tap your card at Starbucks. You Venmo your friend for dinner. You pay your taxes online. You rarely touch physical cash. So, when governments announce they are launching a digital dollar, a digital euro, or a digital pound, the average citizen shrugs. They think it's just an upgrade, a faster, more efficient version of what we already have. This is the lie. Currently, when you use a debit card, you are using commercial bank money. You are moving a digital representation of a liability that a private bank owes you. It is a digital IOU. The system is slow, it involves intermediaries, and yes, it is digital, but a CBDC is fundamentally different. A CBDC is a direct liability of the central bank itself. It bypasses the commercial banking system. But the most critical difference isn't about plumbing or settlement speeds. It is about programmability. Current money is dumb. If you have a $10 bill or even $10 in your Chase account, that money doesn't know what it is being spent on. It doesn't know if you are buying milk, a donation to a political rival, a plane ticket, or ammunition. It is neutral. It functions as a medium of exchange. CBDCs are smart money. They are programmable code. The central bank can write if-then statements into the very currency itself. Agustin Carstens, the general manager of the Bank for International Settlements, essentially the central bank of central banks, said the quiet part out loud in 2020. He stated that with cash, they do not know who is using it or where it goes. But with a CBDC, the central bank will have, quote, absolute control on the rules and regulations that will determine the use of that expression of central bank liability. Absolute control. This programmability changes the nature of the asset entirely. It turns money from a store of value into a system of vouchers. A store of value is yours to keep. A voucher is issued by an authority for a specific purpose, usually with an expiration date and conditions of use. When the government issues a food stamp, you can only buy food. When the central bank issues a programmable CBDC, they can turn every dollar in your possession into a conditional voucher that only works when, where, and how they say it does. Let's break down what that control looks like in practice, specifically focusing on the economic theories that justify the expiration date. Economists have long feared what they call the liquidity trap. This happens when interest rates are near zero, but people are still too scared to spend. They hoard cash. When people hoard cash, businesses don't sell products, they fire workers, and the economy stalls. In a system of physical cash, the government has limited tools to force you to spend. They can lower interest rates, print more money to cause inflation, and hope that you realize your cash is losing value, so you better spend it now. But inflation is a blunt instrument. It is slow, messy, and creates political unrest. With a programmable CBDC, central planners can implement negative interest rates instantly and aggressively. They can code your stimulus check or your paycheck to decay. Imagine a world where every dollar you earn loses 1% of its value every day it sits in your account. This is the economic theory of use it or lose it. This concept actually has historical roots known as Gesell money, named after the German economist Silvio Gesell. In the early 20th century, he proposed money that would rot like potatoes if it wasn't used to prevent hoarding. At the time, it was impossible to implement on a large scale because stamping physical bills with expiration dates was a logistical nightmare. But with digital code, it is as easy as a software update. This effectively outlaws the ability to build generational wealth for the middle and working class. Savings are the mechanism by which the poor escape poverty. You save capital to invest in a business, to buy property, to educate your children. You delay gratification today for security tomorrow. But if money has an expiration date, you are forced onto a permanent hamster wheel of consumerism. You become a conduit for capital, not a holder of it. You work, you get paid, you must spend, and you return to work. The concept of the nest egg is erased from the code. The government effectively says, "We will take care of your future. You just focus on spending today." It creates a society of dependents who live paycheck to paycheck, not by accident, but by design. Furthermore, this allows for precision economics. With CBDCs, the Fed could set different rates for different people, helping low-income workers while punishing hoarders. More sinisterly, they could tighten local economies in regions that voted against the current administration to induce economic pain. The use it or lose it economy destroys the psychological safety net of the individual, leaving you desperate and without leverage. This shift transforms the economy from a system of voluntary exchange into a system of forced circulation. And once the precedent is set that the government can dissolve your assets for the greater good, there is no limit to what they can do. Economic stimulation is just the tip of the spear. The true power of programmable money lies in behavioral control. This brings us to the merger of your bank account with your social conscience, or rather, the state's definition of it. We are entering the era of the social credit merge. We are constantly hearing about the existential threat of climate change and the need to reduce our carbon footprint. Currently, this is managed through taxes or voluntary reduction, but let's look at the infrastructure being built. There are already credit card trackers that calculate the carbon emissions of your purchases. Right now, they simply show you the data. They are passive. With a CBDC, the government could institute a specific carbon allowance hard-coded into your wallet. Let's say you go to the grocery store. You scan a pack of steaks. The terminal declines the transaction. You check your balance. You have plenty of money. But the code embedded in your digital wallet knows you bought meat 3 times this week. You have exceeded your carbon cap for the month. The money is there, but it is programmed not to work for that specific item. Apply this logic to everything. You want to book a flight to visit family? Sorry, you have already flown twice this year. Permission denied. You want to buy a specific book that the government has deemed misinformation? Transaction failed. You want to support a protest movement that opposes the current administration? Not only is the donation blocked, but your entire wallet is flagged for suspicious activity. This is not a theoretical capability. It is the primary feature. China is the blueprint. The digital yuan is already integrated with their social credit system. If your social score drops because you jaywalked, played too many video games, or criticized the party, your financial freedom is throttled. You cannot buy train tickets. You cannot get a loan. The West looks at China and says, "That won't happen here. We have democracy. We have rights." But we have already seen the beta test. Look at what happened during the trucker protests in Canada. The government invoked emergency powers to freeze the bank accounts of protesters and those who donated to them. They didn't need a court order. They didn't need due process. They simply cut off the financial blood supply. Now imagine that process automated. In the Canadian example, the government had to pressure the commercial banks to freeze the accounts. It was a messy, manual process involving phone calls and lists. With the CBDC, there are no commercial banks to pressure. The government has direct access to the ledger. They can turn off your ability to transact with a single keystroke. In a fully cashless CBDC society, being debanked is equivalent to being exiled. You cannot buy food. You cannot pay rent. You cannot function. Consider the concept of geo-fencing. Programmable money can be restricted to specific locations. During a future pandemic or a climate lockdown, your money could be coded to only work within a 5-mile radius of your home. If you try to buy gas in the next town over, the transaction fails. This aligns perfectly with the 15-minute city urban planning concepts being pushed in many metropolitan areas. The technology exists to ensure you stay in your lane, literally and financially. The psychological impact of this cannot be overstated. When money becomes programmable, the relationship between the citizen and the state inverts. Currently, the state is funded by the citizen through taxes. In theory, the state works for us because we pay the bills. But in a CBDC world where the central bank can create and destroy money at will and dictate how it is used, the citizen becomes a dependent of the state. You are given an allowance, and like a child with an allowance, it can be withheld if you misbehave. This brings us to the profound difference between surveillance money and freedom money. We often hear Bitcoin and crypto lumped into the same conversation as digital currencies, but philosophically, they are opposites. A central bank digital currency is a centralized, permissioned surveillance tool. It is a top-down control grid where every transaction is visible to the issuer, and every unit of value can be modified or censored. Bitcoin, by contrast, is decentralized, permissionless, and neutral. When you send a Bitcoin transaction, the network does not care who you are. It does not care if you are a saint or a sinner, a communist or a capitalist. It does not check your carbon footprint. It simply verifies if you have the keys to move the coins. It is bearer capability in digital form. This distinction is the most important battleground of the 21st century. Critics of Bitcoin focus on its volatility or its energy usage, often missing the forest for the trees. The value proposition of decentralized crypto assets is not just number go up. It is the existence of an exit valve. It is the ability to opt out of a system that can confiscate your wealth via inflation or confiscate your agency via programming. If the government enacts a CBDC with an expiration date and you have no alternative, you are trapped. You must spend. You must obey. But if there is a parallel system, a digital gold, a decentralized ledger, you have a way to preserve your labor. You can convert your expiring government tokens into an asset that cannot be debased or deleted. This is why central banks and heavy-handed regulators are often so hostile toward the crypto industry. It is not just about consumer protection, it is about competition. Bitcoin breaks the monopoly on money. And if you are trying to implement a system of total control, where you can dictate what people buy and when they buy it, you cannot tolerate a backdoor that allows people to escape. The rollout will be gradual, then sudden. It will start with stimulus and convenience. It will move to incentives for good behavior. It will end with penalties for bad behavior. They will sell it to you with the promise of free money. This is the hook. When the next crisis hits, and there is always a next crisis, they will say, "Download the Fed Wallet app, and we will drop $2,000 into your account instantly." People who are desperate, people who are hurting, will download the app. They will accept the terms and conditions without reading them. They will spend the money, and just like that, the trap snaps shut. Once the network effect takes hold, once the majority of merchants accept the CBDC and cash is phased out as unsanitary or archaic, there is no going back. What happens to the concept of the middle class in this environment? The middle class is built on stability. It is built on the predictability of the future. You work today so you can rest tomorrow. Programmable money destroys the future. It forces you to live in an eternal present. If you cannot hoard value, you cannot plan. If you cannot plan, you cannot be independent. You become a cog in a machine that requires constant inputs to keep spinning. The conflict of the next decade will not just be between nations. It will be between two differing philosophies of value. On one side, centralized, programmable, surveillance money. Money that spies on you, money that judges you, money that dies if you don't use it. On the other side, decentralized, neutral, permanent money. Money that is blind to your politics. Money that respects your ownership. As we move toward this digital horizon, the question you must ask yourself is not just what is in my wallet, but who controls what is in my wallet. Because if the answer is a central planner who can turn your life savings off like a light switch, or set a timer on your hard work, then the money isn't yours. It never was. You were just holding it for them. And their patience is running out. The ability to make a mistake with your money, the ability to waste it, the ability to hoard it, the ability to give it to a cause the government hates. This is the definition of financial freedom. If you only have the freedom to spend money on approved items within an approved time frame, you are not free. You are merely managed. The future isn't coming anymore. It's being installed. You can either be a user of the new system or a product of it. The choice is yours. Hit that subscribe button to keep your eyes open, and I'll catch you on the other side.